Welcome back to my channel. As you might already know, in this channel, I cover companies that I consider investing in. In most cases, I'm already an investor or have bought shares in the company in the past. And in this video, I'm going to be covering Big Five. This is a small retailer. They focus on sporting goods and they are a discount retailer. They've done really well, especially in the COVID years, and was a stock that really had a great return for me. But this past year, it's the stock price has really gone down. Part of the reason is that their revenues have gone down, their overall profits have gone down, but the market cap for this company is really small. So the potential is really high, in my opinion. It's a company that I've actually shopped at for, 30 plus years. I've lived in Southern California my whole life, and it's a Southern California retailer, and they've grown outside of Southern California, but it really has been a company that, has an assortment that makes sense to people that like to get outdoors, go skiing or like to play softball, baseball, those kinds of things. And they have a very good assortment of tennis shoes and shoes all around. And they have really good prices, which is one of the reasons I've been a customer for so long. I'm going to be analyzing Big Five, going through and valuing the company based on their most current earnings release. They announced their earnings on November 1st, and I have a fresh set of financials for the third quarter of 2023. I'll go through my process and make a decision whether I should buy more shares, hold my shares, or sell my shares in Big Five. Do me a favor and like my video and subscribe to my channel. That's would really help my channel out. I'd appreciate that. And provide comments on Big Five. Let me know what you think. Now let's get into Big Five. I take stocks through the same process as I make a decision to buy, hold, or sell. And it involves four questions followed by a decision. The first question is, do I want to be part owner in this company? And do I like the industry? Do I think the company is operated well? And that's really a grade on the management team. And is debt less than 3 times EBITDA? And I want to discount the stock so I can make money on my investment. And based on the answers to those questions, I'll buy, hold, or sell. So Big Five has been a discount retailer for really its entire existence, and it really makes sense for their clientele. For example, people that are raising kids, you're going back to school, you need to buy new shoes for your kids or things for your kids to participate in sports. Big Five is a great retailer for that type of consumer, and they've done well really catering to that consumer. Also, if you like camping, they have a great assortment of camping and fishing, and in some cases, guns and ammunition. And they do really well in catering to that outdoors person as well. So I really like the assortment, probably because I'm an outdoors guy and I've been a customer for a long time and feel like they provide good value to the consumer. They also have a really low cost structure. They keep their expenses down. They really operate efficiently. And I like that about the company. I'll get into their financials and get into their profitability and their free cash flow. But I would just say that the market cap for this company is tiny. And if you have any type of good news and they get on a run like they did during COVID, this stock can double, triple, quadruple very quickly. I should know I bought this stock at $2 a share and it peaked at $40 a share. And I sold all my shares. That happened, it began to happen during the COVID years, and it really peaked out about a year and a half later. Looking at their most current financial statements, and it's really for the October 1, 2023 timeframe. I'm going to look at the quarter as well as year to date. And you can see that their revenues have been going down. Last year, the revenue for the quarter was 261 million. Right now, they're at around 240 million. So a decrease. And part of that is that, I think the demand for products has gone down some. During COVID, everybody wanted to get to the outdoors. So Big Five saw record revenue, record everything. And we're kind of getting back to a more normal economy for them. So you're seeing that decrease. So it kind of makes sense to me. And then for the year-to-date numbers, they were at 757 after 3 quarters last year, and this year they're at $88 million. Again, it's a decrease that I understand. Good news is they were profitable in the quarter. Very good. Way to be profitable. And you can see that last year they were really profitable. Keep in mind, they had, after 3 quarters, about $1 of profit, over $1 of profit per share, and their stock price is trading at like $10 a share. So a very good return. But since then, profits are down, and you could really see the stock price go down as a result. Big Five has no debt. That's always a good thing. No debt, and they carry cash on the balance sheet. They have their inventory in very good shape. You've been seeing their inventory go down, which is very good. That way they don't have excess inventory that they have to write off. So overall, their balance sheet's in good health. Big Five generated positive free cash flow. If we look at cash flow from operations, they generated $21 million from operations. And when we deduct the purchases of property and equipment, the money they have to put back into the business, they had positive free cash flow, which is higher than last year. So that's very good to see. I'll use that. I'll annualize that number, and I'll use it as my starting point on my valuation. I believe Big Five is discounted by 60%, and that's a big discount. Let me take you through how I get to that number. Principally, I value companies based on free cash flows, and I annualize the current free cash flow that the company is producing, which ends up being about 17 million. I'm going to grow those free cash flows in the first 4 years and long-term by 4%. The company has done that in the past, and I expect this is a conservative forecast for their free cash flows. All cash flows beyond year 4 and terminal value. It's kind of squeezed here, the title, but this is terminal value. Terminal value is 286 million, which is all the free cash flows they'll produce into the future. I'll go with a high weighted average cost of capital of 11%, since it is a small company and it's a retailer, even though they don't have any debt. And when I discount and get the net present value of all those free cash flows, I get 226 million as a net present value of all those free cash flows using a discount rate of 11%. I'll add the cash on the balance sheet, and they have no debt, so I don't have to add any debt. So it actually increases the equity value of Big Five to 243 million. The company has a market cap of 172 million. So when you compare the current stock price with the value per share that I calculate, get about a 78% discount looking at their free cash flows. I also look at their dividend. Their dividend, they're paying out about half of the free cash they're generating. So, I think it's fine. I think it's safe. And when I discount that dividend, I get to a stock value of $7.14, and you can see how I discounted the dividend rate. And there's the formula. But it gives me about a 26% discount if you just, look at the company strictly on their dividend rate. I combine the two, but put more weight on the free cash flow method. I get to about a 60% discount on Big Five. Again, their debt to EBITDA is excellent. They have no debt, which makes the ratio 0, and I want it below 3. So they're in good shape on the balance sheet. Looking at where the stock has traded over the past year, you can see that it's really gone down in value. It's trading around $12, $13 a share, and it's down to $5.66 per share. I think the decrease in revenues and the decrease in profitability is really scaring away investors. Year to date, the stock is down 36.9%, and they pay an 8.8% dividend. So I think there's significant value to the upside of Big Five, and especially if they have a good holiday season, this stock can really rally quickly. Not too long ago, the stock had a short squeeze, and the stock reached up to about $40 a share. It was great to be an investor. I sold all my shares, and that was my big winner of 2021. And sold all my shares, waited for the stock to come back down, and then started investing in the company again. So it is a company that can become a multi-bagger very quickly. And again, their market cap's so low, it could go lower, but its chances are there's a better chance of the market capitalization to go up versus down when a company is so low valued already. It's decision time. Should I buy more shares of Big Five, hold my shares, or sell my shares? Well, let me go through the scorecard and make that decision. So first, I do like the company, and I do like that they really focus on discount retailing for sporting goods. That focus, I think, makes them very competitive. Amazon can't come in and take their business. It's just, you know, people would rather go try on shoes as an example and get a really good price on them. And Big Five caters to that person, or they want to go try whatever they're going to be using in their outdoor activity. So I really like this little company. I like the management team. I think they operate very efficiently with low cost, and they have no debt on the balance sheet. So it keeps that the risk, they don't have to pay these high interest rates. Perfect. They're very flexible. So I like that about the no debt equals low risk on the balance sheet. And they offer a big discount. So I'm going to be buying shares of Big Five. So in the beginning of 2020, when the pandemic hit, Big Five was left for dead. They were at $2 a share. And I put in some capital. I bought, Big Five because I knew the company. I'd been a customer for more than 30 years. And I'm really glad I did so. I made lots of money on Big Five. When the stock price reached, above $40 a share, it was immediately like a 20x my original, buy price. And I kept buying over time. But overall, it was the big winner in 2021 for me. And, I sold off all my shares. I think something similar can happen in Big Five again. I think it can multi-bag very quickly. And it really takes 1 or 2 quarters of positive results. In the meantime, if they just keep, operating the way they are, they keep generating really good free cash flow. So I like that about them. So overall, I don't consider them a big risk because I think they're a well-run business, but I think it has very good upside. I'm going to be a holder and buy more shares, and we'll see what happens. So I hope you liked the video. Hope you found it interesting, and I'd love to hear comments from you on Big Five. And do me a favor and like my video and subscribe to my channel. Good luck investing for the remainder of 2023.